All right. Let's just get right into it. Let's get right into it. So, the roadmap from yesterday, what I'm learning, what I received from that was simply we already projected a break to the downside, literally tapped the level that we had marked out yesterday at 1623.21, tapped that level, reversed. Beautiful. A couple things that I had planned was this was a potential buy area until it was broken. You see it was broken. Now, if it were to be broken, which it actually was here, if it were to be broken, we will wait for it to retrace, create a double top at a major level, whether that was this support or this resistance, and then sell again. Now, that's pretty much exactly what happened in terms of it broke to show that this is where it wanted to go, and it broke that during Asian session yesterday. But now when it broke, obviously we're not going to sell low. That's one, but it did break, and then it did come back, retested the major 4-hour invalid level that actually turned to be valid once this 1-hour candle closed here. So that's what made that valid. Then it retraced, tapped it once, tapped it twice, double top, left. So now all I want to do is get a quick screenshot of that. And we're going to save this screenshot for our notes later on. Where's that bad boy at? Bro, clear the notification. Try it again. What's going on here? There we go. I don't know what's going on, but yeah, let's just do what we gotta do. Market structure, market phase, market pattern, market timing. all the things. Literally readily available in this, very clear in this 1 hour structure. All right, so now that we have our recaps done, let's go ahead and go here. What I want to know is why this initial push happened. For me, it'll be doing the same thing that we did the day before, which is just simply going to our news on investing.com, seeing if there was anything that, consciously popped up during that time frame news-wise, and then we'll go to our economic data to see if there was something that also popped up, and then, just go from there. So, says gold inches up, copper recovery, boom, 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 Wall Street waters choppy and negative, gold bears, I-1600 as dollar flies, U.S. stocks rise, Dow Jones, boom, boom, boom. So I would say, I think I read that one. Let's read this real quick. He says, the dollar is in flight, and that's basically gold's plight. Nice. The rally in the U.S. currency showed no signs of slowing on Monday as the dollar index, which is pitted against the euro and 5 other rivals, reached another 20-year high on the back of relentless hawkish chatter by Federal Reserve officials trying to talk down inflation. Monday's peak, Monday's peak of 1442 for the so-called DX trading symbol of the index marked a peak since May 2002 when it reached a high of 1547. There's still some way for the dollar index to go. It reached a high of 21.29 in July 2021 as the US currency takes out one peak after another. Things are getting uglier for gold, though. Gold's benchmark futures contract on the New York's COMEX December settled Monday's trade down $22 or 1.3% at $16.32 per ounce. The session low of $16.28.90 marked a bottom since April 2020, when gold's benchmark futures then plummeted to $15.76. The spot price of bullion, was down $19 or 1.2% to $16.24. Spot gold's bottom for the day was $16.21.85. As September winds to a close and the final quarter of 2022 beckons, gold bulls basically stare at a loss of more than 5% for the month and a drop of almost 10% for the third quarter. The irony is much of those losses have come within the past 2 weeks, as gold took out one support after another, snapping the 1740 support. Now, the target for bears seems to be the low 1600s or even sub 1600. We are exploring minor support at 1616 and 1602. Major support will be 1560, which marks a 50% Fibonacci retracement of the long-term upward wave from 1040 to 2073. Got it. Now, again, that's valid information. Gold inches up, copper recovery hammered by China, Wall Street waters coming. That's all I'm going to look at right there. And then I just want to see if there was anything in the Asian session, economic data-wise, that came to play, man, because I have no clue. Like, 25th, no fucking clue, bro. I think this needs to load. Let me see. Let's load this up. I mean, I guess there was some pound stuff flash Manufacturing PMI. Bank of Japan Governor Kuroda. He spoke. Man, nothing that I really see. I mean, besides, like, I'm trying to just identify why this initial push happened in freaking Asian session, bruh. Like, this happened literally, and then it came back, it tapped this level, and then it flew. And that fly, let me see this. When did it leave? That's 7 a.m. What, my time? Yeah, that's my time. Los Angeles. Bruh. Let me think. 7 a.m. my time. Shit, I had work at 8. I don't know. That probably should have been caught somehow, some way. And I'm trying to think of how it could be caught. Like, this one's at 6. I mean, if I'm here at 3:30, but it took off at 7 my time, that's 10 a.m. New York time. Let's move this shit to New York. Yeah, that happened at 10 a.m. New York. And if I was planning on being there this previous morning at 3 a.m. New York, so sit here. Okay, then that little buy would have hit, take profit hit there. But then this was the move for the day. Now I want to see the daily. Yeah, that was nice. That was a good day trade right there. Alright, cool. So what we're going to do here is delete some of the main things that already happened. Like this. And we're going to set up our new levels and things like that. I might honestly give it a whole restart. It don't really matter. Let's go back to the weekly. Mark out our previous. Basically, all I want to do is mark out my previous low and high, and then the current low and high. So this was my previous week high. Here was my previous week low. Here's my current week high. Here's my current week low. Right? So that's what we got on the weekly. And then once again, looking left, it is at a decently major support. Clear wick fill to the bottom. If you want, we'll just throw it there. Boom. And then giving the daily a look. So what I do like right now is this is a very obviously this is a bearish market structure. Break to the low. This is the daily time frame. Break to the low. Push phase. This candle, daily candle, no wick on the bottom, is, you can even say it's made its high. Not to say the high is done, but it has made a high. Even pulling this out temporarily as market structure did what it did. We're already tapping into that 38 daily. Alright, we're going to slide down. Because obviously everybody knows that the consensus right now for gold is sells. What I do notice here is a couple levels of importance where we have 4-hour time frame really marking out structure. And here we have 4-hour. That's what that is. So this was a support level, strong support level, and that level was smacked. Then we have the current 4-hour lower low. Current 4-hour lower low. And then we have our last extremely valid level, which is our 4-hour valid lower high. Now at that point, what I do like to see, is we do have some clear levels to play off of, very clear levels. So at this point, you just got automatic potentials of, this is a level that could be respected because the market structure is already in place in this way. So this is a level that could be respected. This is a level that can be respected. And this is a level that can be broken. Now, always on the flip side of that, this is definitely a level that can be respected. Now, the only reason why we say that is just based off of market structure. You feel me? Lower low until it's broken has a high potential to be respected. So at that point, just following market structure, just letting price do what it has to do. At the end of the day, we know gold is bearish against the US dollar, and playing these levels that, this is a high demand level at this point. You feel me? If it comes down here, price is low and it could bounce up. Now, obviously, through this level, price can still come into here. I want these things to be decent. You feel me? This is a level that price can bounce off of. This is also a level that price can break. Now the cool thing is, if it does this, let's just flip it around. Because the only way, if it does break, the only way we want to sell is if it can come up and do this. It's always what we want. We always want to sell here, buy here, sell here, but you know what I mean? Very simple. I have very simple laws, and I mean, they're not anything that I made up by any means, but they are things that I'm most comfortable with in terms of, I really don't like to sell price at a low or breaking a low, because at that point I always feel like it has the highest logical potential to bounce off of a low because it's a higher demand level where people will buy. And then in vice versa, for highs, I usually don't like to buy when price is moving up because that's a heavier supply level. You know what I mean? So if structure's down, I want to sell when price is moving up to come back down. If structure's up, I want to buy when price is coming down at a demand level to buy back up towards highs that it has already made. So as of right now, as I'm looking, this is definitely a very interesting level. Plus, let's make sure we're on the bottom of this. Plus the fact that we're getting major exhaustion, things like that. So off the Richter scale, price can move up. It can come up here, all without breaking the downtrend structure, literally. And so there's never really a point of missing the opportunity because let's say it comes up here, we're not there, and it falls, that's fine, comes back up, sell. Down, let's say it breaks this, we didn't miss anything, it can come back up and then sell. You know what I mean? So very simply put, I don't even really want to mark this out. Nobody has talked about that level happening per se. Obviously it could happen, but it is going to run into these levels anyway. So let me go ahead and just delete that. At the end of the day, I'm not saying that could not happen. That's something that we would adapt to when it happens. You know what I mean? But as of now, market structure is like, hey, here's a valid lower high, and the downtrend is intact until this is broken. If this is broken and it's like, boom, all right, we'll buy it. When it comes back, creates a double bottom, and we'll go back up because then we have the high that it made plus the potential that's always what it's about. Like the fact that it made this low, okay, it's coming up now, or it came up, okay, cool. So at that point, if it can come up, create a double top at one of these major levels, or at least at or near one of the major levels, create a double top, show evidence that it is exhausting, then we could sell knowing that we have where it came from, it can go back there, plus the potential of going to the next major level that we marked out on the weekly, and we can mark out again on a lower time frame than the weekly. So for now, I'm gonna just go ahead and screenshot this, add this, because we're keeping it very, very simple. Hold on, bro. We're keeping it very simple at this point. We're not being difficult. We're not being complicated. We're not using all these extra whoop wop wops. Ideally, it's a very simple investment principle to buy low and sell high. And so at that point, wait for market structure, wait for price action, wait for the price pattern, wait for the proper phase to take action on a trade with that energy of, okay, boom, I know it's a downtrend. There's my market structure. It's a downtrend market structure. Okay, what phase are we in? Well, shit, we're coming off of a push phase and we're currently exhausted. Great. So I will be looking for sales based off of the proper pattern of a double top at a major level to go back down to where it came from and potentially more. Now we're gonna go to the 1 hour time frame to really look at that. Like you see it, bro. You really see it. Like this is already a very interesting level. It really is, to the point to where if price came in this level, what I'm working on is discipline to only actually take active trades during my session. That's what I'm working on. Only take active trades during my session. That's what I want. That's what I want to do. That's what I want to commit to within myself. Only take active. So that means if I can't take a trade in Asian, I'm going to sleep during London, and I'm going to wake up for pre-New York and New York session itself to act on what's left of the roadmap that has yet to happen, shows signs of happening, and I have the opportunity to take action on. You feel me? So at this point, the cool thing is about gold for me is the structure is beautiful. The structure is literally beautiful. It really is. Like this whole area is gorgeous. It really is. And the funny thing is, it's really just about making this session right here very simple, very clean, no pressure, no FOMO, but to mark out what we see now, get it in our brain as we're about to go to sleep, put it in our brain what the opportunities are, letting price react overnight while we sleep, coming to what's left and what has yet to happen, or what has happened and been retraced, you know what I mean, X, Y, and Z. And as long as it's going with the roadmap, take action in the morning. So I'm gonna say Asian. 1 hour Asian sesh roadmap, and then I wanna I'll save that. Come here. Right. So I mean, we're gonna open this up, scrunch it down a little bit, and just observe. You know what I'm saying? Just observe. Like, as of right now, just talking it out. Here's the previous week's high. Here's the previous week's low. Here's the current week's high. Here's the current week's low. If you want to pull out the handy dandy Fibonacci, which is very valid. You know what I mean? Like, prices literally created like, bro, you can't even make this shit up, bro. Like, you literally smacked the 38, made a double bottom, and came back to retest and potentially go higher. Yes. To this level, so the 61.8 is very near this 4-hour broken support level. Like, they're very close. So at that point, market structure in this area, double topping to come back down, back to the zero, there's a beautiful opportunity potentially. Because like what we could do right now, I could throw a sell right now in Asian. But what if it rises up? And it's not even like a negative, like, oh, what if it does this? What if it does that? But it's very likely. You know what I mean? It's very likely that it already tapped the 38 once, came right back to it. Why would it not go to the next level, higher supply level, to come back down? Like, why would it not? You know what I mean? The downtrend structure is in place until this key level right here is broken. So we are looking for sales no matter what until this level is broken. You could take it here, but it's not my session. And I'm being very diligent on that. I'm coming during New York. I'll be here during pre-New York. So I'll be here at 3:30 in the morning my time, 6:30 in the morning New York time for pre-New York analysis, patience, moves, volume, knowing that 7 a.m. New York time, 8 a.m. New York time, which is still 5 in the morning my time, price is going to be popping. So this is what we got going on. It's beautiful. It's very, 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 very beautiful. And that's how we're going to rock. So I'm not going to take action until I come in the morning to make myself actually be disciplined to come in the morning. So that's what we got right now. I'll come on here, create a live session, and we'll take our trades and go from there. And just be patient. Yeah, well, that's all we got for today. Actually, before we go, let's see what's on the docket for that time frame that I'm going to be here tomorrow morning. And let me reload that. All right, so this is on my time. So at 4:30, we got Fed Jerome Powell speaking. 4:30 my time. That's going to be an hour into the session. Let's say we want to be here for 2.5 hours. You know what I mean? 2.5 hours mean I'll be here till from 3:30 to about 6 a.m. But as you can see, there's a lot of volume coming during that pre-New York time. This is literally, 4:30 a.m. my time is 7:30. So yeah, this is the volume right here. This is the volume. This is the volume. This is the pre-New York volume. And then you have New York open 6 a.m. where, like, you know, the stock exchange opens. And then you have some slight. And then a little bit more. You got some more. You know what I mean? So just know there's going to be a lot of volume during my time of trading. And, yeah, just be very aware of it. And stay very disciplined. Follow the trading plan. And just go from there. So this is what we got going on tomorrow. And that's it, boss. That's it.